Welcome back to another boardroom briefing. I am your host, Paul Maskill, and today we're going to talk about one of the biggest margin killers I see in that $3 to $10 million company in the home service space. It's not sales, it's not number of leads, it's not spending too much on marketing. It's none of that. It's labor. More specifically, the hidden labor problem that owners don't often fully see until cash gets tight. They might not even know their margins slipping, but they realize they're doing more than ever, doing more revenue than ever, have more calls than ever, but the business feels heavier than ever. And this matters because, like I say all the time, a lot of owners thinks, well, we'll just outsell this problem. This is just a revenue problem. Once we get to the next level, cash won't feel tight. And that's really, going after the it's just trying to attack the symptom. Well, if we don't have any money, we must just need to bring in more money. But it's not getting to the root cause of the problem. And many times that problem is things related to labor efficiency, labor burden, and what does it actually cost to send out technicians, installers, apprentices out into the field. Many cases, many cases, the real issue is that we need to solve the labor problem and the labor structure and how they're compensated and how they're efficient and what's actually going on, because the payroll is not converting into the profit the way it needs to be. Ideally, you're running on some sort of performance pay and you get excited about higher payrolls, because higher payrolls means we did more revenue. And if our margins are right, it means we're going to have more left over at the end of the day. So in this briefing, that's what we're going to talk about, is the illusion around labor. And maybe it's not even illusion. I don't know what the best way to call it is. So sometimes we don't even know it's the problem. But when we can really get to understanding what's going on, call it under the hood, that's when we can really start to make changes to have a more financially healthy company producing consistent positive cash flow with better margins. So what many times we think of is, well, man, we're working harder than ever. The guys are putting in more hours than ever. We're even, putting in more than 40 hours a week. They're busy nonstop, but busy is not productive. And a lot of times we just misread what that labor effort is actually hiding, and what's actually going on in the business, because the team's showing up, the trucks are moving, technicians are running calls, install teams are working, payroll's going out. So natural assumption is everyone's busy, everyone's working hard. Therefore, we must be paying our guys properly. We must be charging accordingly. But that assumption creates one of the most expensive blind spots in business. Like I said, it's not even an illusion. It's just a blind spot, because hard work and profitable, efficient, productive labor are not the same thing. A technician can work hard all day and still not produce what they need to produce. An install crew can really stay busy all day, every day. It's like, oh, they're going to be on this project, all day, so they're not going to be driving. Things are going to go well, or maybe they're on the project all week, but they're still not generating the profit or margins that we need. The board's full, but at the end of the day, the owner is wondering where the cash is. So that's the blind spot. That's the illusion that, all of this busyness should equal profit and cash, but it doesn't. So what's actually going on? The number one problem here is, and we're going to get into, like, I don't know, 3 or 4 of these things, but the number one problem is labor is more expensive than most owners realize, especially when you're not on performance pay. But even when you are on performance pay, there are so many other costs of labor that we're just not fully capturing in the pricing of our services. So what is that? What do I mean by that? Well, if you're paying somebody, call it $25 an hour, they're going to be a lot more expensive than that. There's payroll taxes, there's benefits, there's workers' comp, there's training time, there's drive time, there's non-billable time when they're getting zeros. There's time in between calls, there's lunch, there's callbacks, there's, warranty work, and all of the other things that go into, at the end of the day, the dollars and cents matter, the minutes matter. Those minutes add up to hours, those hours add up to weeks. And when you're multiplying it by the incorrect number to begin with, then we are really out of line. And if pricing isn't built around what you've probably heard people say this in Facebook groups, or, at the supply house, whatever. What's your fully loaded labor? Well, that's what we're talking about. What is our fully loaded labor? What does it actually cost to employ somebody on an hourly basis? So that is the number one issue that I see here. Is labor is more expensive than owner realizes. Number two, labor efficiency is weaker than we actually think. Many times we're not even tracking it because we don't think it's that important. A lot of businesses assume that, we're good enough because the team seems like they're busy. But labor efficiency breaks down in subtle ways, spending a little bit too much time driving, jobs taking a little bit too long, longer than they should. Maybe the technician's waiting a little bit, a little bit too long for dispatch. Install crews staying late because they want to get the job done for the homeowner, or sending people to callbacks because we're a little bit slow. It's like, hey, we got some warranty work to do, or hey, this person called back, can you run out and check that out? Or your technicians just aren't performing. So many things, when you're losing a percentage point here and a percentage point there, at the end of the day, they all add up and they erode contribution every single day, every single week. So that's number two. Labor efficiency is just not as strong as the owner thinks. Number three is we're carrying the labor for the company we hope to become. This is especially true in companies that are not performance pay, or they do not have performance pay dialed in. At this stage, many owners hire ahead of revenue, but they don't know how far ahead of revenue they need to hire because they think, well, we're going to need these people eventually, so let's bring them in there. Yes, if they're a great hire, we need to capture that person. That's my philosophy. But sometimes we keep other people too long because we want to be ready for growth. Well, we're going to need them someday. That's really just an excuse. It can sound responsible, but if your field, is built for an $8 to $10 million company, but we're actually operating at 5 to 6, payroll pressure becomes more permanent because we'll never get to we don't have enough time to go from 5 to 6 million to 8 to 10 million. It just would take too long and we would never be able to catch up. And that's, a lot of times that's where we're getting stuck. Again, this one's especially true if you're not on performance pay or your performance pay isn't dialed in. If everyone's on performance pay, this is, kind of a tangent, but if everyone's on performance pay, you say, well, I don't really care what they do. Well, many times then your overhead or office payroll is too big for the revenue producing because you need all these dispatchers and CSRs to serve all the people on the field. But if all the people in the field, even if they're on performance pay, aren't performing how they should be, then we're just not that efficient because the revenue per employee then starts to become a big factor. So that's number three. Number four kind of ties into this, but the owner just tolerates a mediocre labor force. This is, really I don't want to have to deal with that type of conversation. Owners that hate firing, they hate holding people accountable, they hate having difficult conversations. They don't want to put scorecards in place. They don't want to have weekly one-on-ones. They don't want to have training on a regular basis. They don't want to make their technicians, in their words, I don't want to make them role play. At the end of the day, they're like, that's their job. They should just figure it out. I'm too tired to deal with that. So we're really going to, the results we're going to get are really up to what are our expectations. And if our expectations are low and we tolerate a lot of crappy things, we're going to have a lot of crappy results. So the lower our tolerance, the lower the less problems we'll actually have to deal with. However, a lot of times business owners just don't want to deal with that. They don't want to deal with hiring. They don't want to deal with training. They don't want to deal with accountability. They don't want to deal with all of those things. They just don't want to measure it because it seems like it's too much work and we're kind of burned out. So what happens? The business absorbs all of that month after month. And eventually, a couple bad months is going to start to show, the cracks in the foundation. All of a sudden we're dipping into our line of credit. We do that for a month or two, and then it's really hard to get out of that. 1 or 2 bad months, it's going to take you 8 months to get ahead of 1 or 2 bad months. So why does this matter so much? Labor is obviously in the home service space the number one thing that we are selling. Without labor, without people in the field, we are not generating revenue. So it's not just another expense line. In a residential home service business, it is the biggest driver of whether we're going to be profitable, creating consistent cash flow, predictable, going back to all the things we talk about on the show, or is it just chaos? If our labor is, overpriced, compared to our pricing, or if we're inefficient compared to our pricing, or if we're inefficient based on what we actually need to get done. If our labor capacity is just out of line with our current revenue mark. If you allow weak performers to continue to stay because it's so hard to find replacements, I just don't like firing people, whatever it might be, then the business starts leaking cash here, it starts leaking cash there. And it's not necessarily obvious. A lot of times we don't think that's the problem because we tell ourselves, well, we're priced, comparable to the market. We know what everyone else is charging. It feels like, we're in the same ballpark. And that's, really where we get confused. You're also going to get confused because your ego and emotions and excuses take over. From the outside looking in, the business looks great. It looks busy. It looks productive. We got all the vans. We got all the technicians. They hear us on the radio. Our team continues to grow. Revenue seems like it continues to go up. But if the team out there delivering the service is not the team we need and they're not performing the way we need them to, we're going to have problems. And that is, kind of recapping that. Again, I don't necessarily call it the hidden labor problem. It is hiding. It's hiding a lot of things, but a lot of times it's just a blind spot that we don't even know exists. So it's not even an illusion. It's just completely overlooked because we don't think that's the biggest problem. So what are those things? Kind of recapping it. Number one, labor is more expensive than owners realize, taking into account all of the other things. We need to know what the quote unquote fully loaded dollar amount is, taking into account payroll taxes, benefits, workers' comp, training time, drive time, non-billable time, time in the morning, unproductive time between calls, waiting for dispatch, callbacks, warranty work, all of those things. Then we look at number two is actual labor efficiency. So how efficient is our labor when they're actually out in the field? So like when we start to add all these things up, we start to realize, well, we need to charge, I don't know, call it $350 an hour for our technician to quote unquote turn the wrench. So that's number two. Number three is we're overstaffed for the size of business we currently are, especially if performance pay isn't dialed in. I see many businesses with the number of techs and installers they have out in the field, they should be an $8 to $10 million company, but they're only a $5 to $6 million company. And then number four, the owner just doesn't want to deal with it. They tolerate poor performance. They tolerate weak labor. They'll complain about it every day, but they'll just tell themselves, well, that's just the way it is. It's too hard to hire people, so I don't want to fire them. They're not trainable, so I'm not even going to try to train them. And they create all of these things that are massive issues for the owner and business. So recapping that, now flipping that, what does the disciplined operator do? So we talk about this in every solo episode. What does the disciplined operator do? They're digging in. They're using numbers. They're not just asking, well, how hard are people working? Well, payroll says everyone's working hard. They're working 50 hours a week. The trucks are all out. The trucks are moving. We're quote unquote rolling 12 trucks a day. The board's full. So, it's definitely not a labor issue. But the questions we need to start asking ourselves are, what is the truly fully loaded labor cost? What does it cost for 1 hour of our technician's time or 1 hour of our installer's time? And then, the second part, going back to the problems, what do we need to do the opposite. So we need to be efficient. So we're going to ask ourselves, how efficient, how is labor converting into gross profit in an efficient manner? What does that mean? That we should know that if we're doing X amount of revenue, this should be our gross profit. It needs to be predictable. It needs to be consistent. So that way we know at the end of every month how much cash flow is going to be left over for the business, for the owner. The next thing we're going to look at is, really just capacity in general. So callbacks, warranty, drive time, all, underperformance. How is that eating into our capacity? Because you'll talk to pretty much everybody on your team like, man, I'm busy all day, but what are they actually producing? How much time are they actually working? How much time and money are we wasting on callbacks and warranty work? And is that priced in accordingly? And then kind of getting into the next level, just a couple more to give you guys before we head on out of here is, knowing how much revenue does each technician need to produce on a daily, weekly, monthly basis? How much revenue does an installer need to produce on a daily, weekly, monthly basis? And then the next step to that is, how am I holding them accountable to that? Do they know what success looks like? Do your installers know, hey, we need to do this amount of revenue per day or this amount of revenue per week? Are those reviews happening? Do they have scorecards? Do they have report cards? Whatever you want to call it. Are you sitting down with them on a regular basis? Are you training them so that way they know these are the minimum expectations? These are the tools and training and support we need in order to achieve that. Now it's up to you to go do it. Now, here's the thing. When you do that, you start to build, and this is a whole nother conversation for another episode, but when you start to build in that culture of accountability and expectations, it's going to attract A players because A players love report card day and the C and D players do not. So yes, you will probably lose people short term, but you start to build this culture all around winning, and winners want to play with other winners. Winners get frustrated when losers drag everybody down, and if the owner or manager isn't doing anything about those losers, where are the winners going? They're leaving. So, do you have all those in place? Do you have those numbers in place? And then lastly, an exercise I like to perform with anybody is looking at your KPIs and what would happen to the financial performance of your company if your closing rate went up 5%, or if your average ticket went up $50, or if dispatch got better and drive time became more efficient, and each person was able to run one more call a day but they didn't have to work any more hours. And we just start to, making these little tweaks makes big things happen. Doing the small things makes big things happen. So that's what the disciplined operator is doing. Again, in recap, they're looking at what is our truly fully loaded labor cost? How efficient is our labor actually out in the field, and what are they producing? Looking at all the wasted time. Where are the callbacks? Where's the drive time? Minutes matter. Minutes add up to hours, hours add up to weeks. And when we're wasting weeks on weeks over the course of a year, it's amazing what can happen if we can recapture that. So that's the third thing that discipline operators are doing. The fourth thing they're asking is, what is our revenue per day goal for a service tech? What's our revenue per day for an install team? Even looking at your comfort advisors, if you have, selling people that are just out there doing selling, how much do they need to sell in order to keep this thing going? When we start to just remove the emotion, the ego, and the excuses, and just really start to focus on numbers and hold each other accountable on those, have those regular scorecards, those regular one-on-ones, and really just defining what a success look like to work at your company. When people know what success, it's a lot easier to train people, and it's a lot easier to hold people accountable when they know if they're winning or losing. And then lastly, the last thing that disciplined operators are doing, they're asking themselves, what would happen if we improved just one KPI at a time? What if we just solely focused on increasing our average ticket? What would happen? And you start to do the math over the course of a year, and it's pretty eye-opening. What would happen if we just improved our close rate, by 5%? Big things would happen. The shift would start to happen in your business. Not going to happen overnight, but when you extrapolate that out and say, wow, if we just did an extra $1,000 a day across a couple of techs, that $1,000 a day is $5,000 a week. $250,000 a year, most of that's going to the bottom line. So that's what disciplined operators do. Disciplined operators stop managing labor by feel, by emotion, by ego. They manage it by the numbers, the financials, the economics. It makes it a lot easier. It doesn't mean becoming cold. It doesn't mean removing culture. It means becoming clear. Clarity for your team will allow them to enjoy coming to work every day because they know what success looks like. And when they are successful, they can actually feel it. So it really means understanding that protecting the health of the business is ultimately what protects the team too. Because if the business is not healthy and the business isn't there, then nobody has a job. So we need to get that labor aligned with pricing, productivity, current revenue, and the business starts to feel lighter, starts feeling more fun because we're actually making money on a consistent, predictable basis. Has nothing to do with working harder and running, just working more and more hours. It has everything to do with setting up the structure, using the numbers so that way our labor, we know exactly what we need to charge. We know exactly where we're at so we can start to achieve the results we wanted when we started our business in the first place. So if your business is doing solid revenue, but it still feels super stressful, super heavy, especially heavier than it should, don't assume that you need more calls. Don't assume that you need more revenue. Let's look super closely at our labor out in the field, because in a lot of home service businesses, labor is where marginally quietly disappears long before the owner realizes it. Because as the business grows, it just becomes harder to manage. When it was you and two other technicians, everybody was holding each other accountable. Everyone was, it was very transparent because it was a very small company. As you grow, we need other tools in place in order, because a couple bad technicians can really take your business down. If this conversation resonated with you, head on over to my website, thebluecollaradvisors.com. There you can learn more about how we work with the owners, how you can book a call. You can download our pricing calculator. You can check out all the show notes and additional resources there. Again, it's thebluecollaradvisors.com. Lastly, as always, this podcast exists to create clarity. And if this helped provide clarity to you and your business, you're exactly where you need to be. And I'll see you in the next boardroom briefing.